Welcome to the June 18th, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. This is the Dow year to date. The Dow's up a measly 3% so far this year. That annualizes pretty good, but you can see this correction right here. That was related to the sticky inflation in the Federal Reserve. I'm going to show you some key data from last month that was just announced. Wow, and we're going to cover the impact. So we could see we got a little rally here, but the Dow kind of left in the dust by the tech stocks here in the month of June. Tech stocks are up like 7% for the month as measured by the NASDAQ 100. Good news. All right, this is consumer inflation. We go all the way back to 2021 when the trouble began. You can see the peak month. That would annualize at near 15%, but it was a 9% trailing 12 months. Everybody knows about that. Everybody's discovered disinflation is not deflation. Just because inflation came down, prices don't go down. Everybody's fussing about that. Well, this is actually some good news. For the month of May, inflation was 0, and that set off a rally in tech stocks. I'm going to cover one of the reasons why. And we go to producer prices. Whoa, what's that? That is deflation. So prices for producers actually went down. That's great for profits. And even though wage inflation is still running 4 or 5%, the other costs actually came down during the month of May. So with that good news, of course, the speculation is, when does the Federal Reserve cut interest rates? Well, that set off a big rally. Why would it benefit the tech stocks more than, say, the stocks in the Dow? Well, part of the answer, well, here's what happened. The NASDAQ, a 17% gain for the year, 16.6. S&P 500, 14%. Again, trouncing the Dow, led by the technology stocks, AI mania, AI hype, and AI reality that improves productivity. And that anticipation is part of this. But when you squash the interest rates, right, you could see the interest rates coming back down here. Well, what happens? This is the Federal Reserve up here. If you look at where the inflation rate is, the Federal Reserve, by their own Volcker thesis, should really be down right about here, closer to 4% instead of 5 1/3% as the average Fed funds rate. But notice the 10-year and 30-year Treasury are anticipating that. If you have a spreadsheet with all the earnings of a company, and you've got to divide for time, because $1 in 10 years is not as valuable as $1 next year. And you usually divide by the Fed funds rate or something similar, or the Treasury rate. When the rates are low, the value of future earnings by mathematical definition is more. And that's why the growth stocks have the big benefit. Whoop, I got a warning for you, and then I have an example of companies that are joining the AI mania buying frenzy. Some of them are overpriced. This company is very dangerous. It's GameStop, grapevine-based GameStop, just for fun. Roaring Kitty has come back from a 3-year hiatus on YouTube, and the stock hit 65 overnight, and then collapsed back down. You could see this is pretty volatile here, back to 17, then close to 50, and now, close to 30. Well, what's happening there? That company doesn't have earnings. They do have $4 billion in cash because they sold stock on top of people, issued more shares, and so now they got a big pile of cash, and they have a terrible business, in my opinion. We'll see what happens with this one. But on Net Worth Radio, we give you warnings, right? We want to keep people, let's say, apprised of what may be a dangerous proposition. I'm Spencer McGowan, your financial weatherman, president, McGowan Group Wealth Management. We serve affluent families right from the Crescent in Dallas. You can go to networthradio.com, contact us there to set your time to upgrade your financial plan. A team of 10 wealth management professionals dedicated to you. This was a notable joining the AI frenzy with Apple rolling out their AI product, Apple Intelligence. Actually, Broadcom was a huge beneficiary. You could see the triangulation, it just spiked, now up 53% for the year. So companies, Microsoft is an obvious choice, NVIDIA, everybody's in a frenzy over. There will be large corrections as these multiples expand, but a lot of the underlying fundamentals here for the companies providing the data centers and data center support or the chips, this is actually something similar to the 1990s when you had the PC revolution along with the internet adoption. It increased productivity. Remains to be seen with the S&P 500 earnings. We'll keep you updated right here. That's why you want to subscribe. Thank you for tuning in today. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.